Hello, everyone. Welcome to this Fierce Forex for Beginners training. This is a free YouTube Forex training I'm doing for any beginners out there who just want to get started with Forex. This is for people who literally have no clue about Forex. They've heard about it. They're trying to figure out, okay, how can I get involved? They want to learn. They've heard about trading and they want to actually dive in, but they have zero knowledge. Okay. So if you are somebody who has already maybe gone online, done your research, a couple of things, tested things here and there, this training series is not for you. Okay, this is basically beginner level. Okay, beginner level, like literally zero knowledge, just like the same way some of us started learning when we got into this industry in 2018. So that out of the way, something else I need to mention, this is a free training. And the reason why it's a free training is because it's just a free structured training. Reason being, a lot of people who come to my Fierce Trade House channel, and then they join my Discord group or my Telegram channel. They tend to ask me about beginner classes. How can they learn and everything? And I realized my Forex YouTube channel doesn't necessarily have a lot of basics, beginner level information. And so I decided to just create this series to introduce everyone and anyone from anywhere in the world. As long as you land on my page, you'll be able to learn everything from scratch. So hope that makes sense. And then what else? So this series will basically cover a couple of things. But before I go into that, let me also give a disclaimer before I forget. What I'm teaching on my in this training series is basically obviously information that is already there. It's just packaged in a nice simple way. Secondly, this is a financial industry, and I think it's important that I emphasize this, meaning that it's a very, very high risk industry. The forex market is one of the most volatile markets in the world. Okay, so chances that you're going to lose money at some point are very, very high. So I am not a financial consultant. I am not a financial advisor. Anything you come across on my YouTube channel is just my bias or my opinion. My opinion is not cast in stone, but I think it's important I say it. However, it doesn't mean that the knowledge I'm sharing is important. It's just good for compliance sake that I actually just mention that so that somebody who comes in knows that there are risks attached to this industry. Okay, so I'm really excited now. Why? Also, other than the fact that people have been asking me about this, it's why I'm doing this is also because when I started my journey of learning how to trade, okay, actively in 2018, I was introduced to this academy. There was so much information, and I went through a season of confusion. So the reason why I'm doing this on my YouTube and giving access to people to just have, just information for free in a very structured manner is because I want you to avoid what I went through. I mean, I'm 3 years in this industry, but for the first 2 years of my trading, it was chaotic, it was hectic, and I went through a series of just blowing account after account after account after account after account. So this is just my way of trying to help you all minimize your losses in the beginning and give you some structure so that you know from point A to point B. And then at a point when you finish this series, you can then make the decision to join my mentorship, okay? Whereby now I dive deeper into the advanced level of training. So for now, let's get started. And so my name, as you can see, is Lillian Okado. Some people call me Miss Fierce. I'm not sure why, but I guess it's because we are the Fierce Trade House and we are all about educating people to become fierce forex traders. And my background is not in forex, it is not in finance. This is me over here, yeah, I know, looking sharp and snazzy or trying to. And I've been an entrepreneur for a couple of years. I actually got into entrepreneurship for the first time in 2000 and I believe 2000 and 2004. And the first time I heard about Forex was actually in 2004. And it was through somebody I met through a newspaper advert. And we met up and he introduced me to this world of Forex. He kept on talking about the way he's a Forex trader or he has interest in currency trading. And that put some curiosity in my mind. And I remember we used to go to a cyber cafe back then to just log into babypips.com. A lot of traders out there are very familiar with this website. And I'm just also mentioning it because it was the beginning of my journey. They have a lot of theoretical information on trading, and I think it's a good resource. So yes, that's where I started. But then at that time, the internet was really, really slow, very expensive. I had just finished my campus, graduated from campus like 2 years earlier or something like that. Don't do my calculation of how old I am, but yes, you can tell. And so I was not employed, so I didn't have an income to sustain being able to go on the internet or justify being in a cyber cafe all day, spending a lot of money to learn this skill. So I shelved that idea. And then in 2017, again, for the second time, the same person who introduced me the first time hit me up again, and this time he's like, hey, come, let's do this Forex thing, let's partner together. He had a business and he needed some people to help support him in the business in terms of just expanding his product. He had an investment product going on and he just wanted more clientele, so I came in to support him in the marketing department of sorts and just to enable him to set up his company a bit better. Now, fortunately or unfortunately, I did not have a very good experience at that particular point in time in 2017. And I mean, let's just say in short, I got scammed, and I got scammed hundreds of thousands of dollars. And this is an experience that literally threw me off. Like initially, before this business, I have an online writing copywriting agency called Say Cheese Writers that I started in 2007. And so I'm a writer by profession. So my background really is in content development, you know, not in Forex. So the fact that I ended up getting scammed is no surprise, and hence why we're on this YouTube series. My job is to educate all of you so that you don't get scammed like I did and lose your wits, because I went into massive, colossal debt. The person I partnered with literally scammed us. Okay, so I don't want to focus so much on that, but because that experience propelled me into another experience again, whereby now I was introduced, like literally a year later, I was introduced to a Forex academy, which is an online academy. And my friend was like, hey, I know you've had a bad experience in Forex, but then there's this company and they're a good academy, blah, blah, blah. Short of it, I was like, okay. But please note that I was in debt. I was living hand to mouth. I was living on borrowed income. I was on the verge of eviction. Eventually, I was evicted. Okay. I was thrown out of my house. Okay. And guys, I'm a mom. I'm a single parent, so I parent my 7-year-old right now on my own. And you can imagine being in that scenario where, I had invested my life savings for my previous business, content business, in this Forex business. So I was at rock bottom financially. I was stressed out. So me just hearing about Forex again was a bit, like, what's happening? Why is this thing just not leaving me alone? But then when I heard that I could learn for myself, I realized, the reason why I had gotten scammed before was because of this thing called lack of information. Okay. And just believing the hype, believing that we could become millionaires overnight, doing nothing but, whatever it is we were doing then. So I dived into this, and I remember it cost me about $234 to start learning in this academy. Very, very expensive for me at the time because, like I said, I had nothing. I had no income. My balance was zero. So I borrowed the cash from people. I just put the money together, and then I blindly said, you know what, I'm going to do this for the last time. If it works, it works. Like once bitten, twice shy, 3 times, you're an idiot. So if it doesn't work this third time, then truly, truly, I am an idiot. So I dived into it. Fortunately, I began to learn. Now, the journey was rough. Remember, I'm in a very tight financial space. By this time, I've actually been evicted from my home. So I'm literally just surviving by a thread. But I remember telling myself that I've heard about this thing for so long. I know people who are actually, or interacted with people online who are actually making money from this industry. So why can't I? So I just put my head down and began to learn. Now, I later moved on from that academy and invested in other mentorship programs that were enabled me to just add, just grow in my knowledge, because I realized that with the academy, I wasn't getting what I wanted. And there was still information gaps in terms of trading profitably. So I ended up spending more money later on. And that journey has really been tough. Okay, was really, really tough, really rough. I blew account after account, like I told you guys. So the reason why I'm here and why I'm doing this with so much passion is so that I can hold your hand, guys, and avoid you going through the same thing. Okay, so that's why this class or this series, this training, this free training is available. Okay, so my goal as an educator, as a trainer and a trader, is basically to train and help 1,000 people break into a profession and become into this profession and become profitable. Period. Okay, that's it. And this is why we are here. Now, someone would be like, oh, why am I saying 1,000? Sounds like a lofty dream. But really, I started training in 2000 and this is 2022, in 2021 in March. So I've done this for just under a year. And so far, I've trained over 40 students in classes, in beginners, advanced level. And it's so far so good. It's been awesome. And I have my YouTube channel that now has about 1,000 plus subscribers and growing every single day. So yes, I've already surpassed the 1,000 mark. So it's not really a lofty dream. So I'm really excited to be able to take you through this process. Now, that being said, what are you going to learn? What is the purpose of this course? We've already said it's to teach you how to trade, help you become consistently profitable. Now, the topics that I'll cover so that you just have a quick rundown is basically what Forex is. Again, this is beginner level information. If you already know this, please skip, move on to my YouTube channel where I do my market analysis and all that. That would be more beneficial for you. So we're going to be learning what is Forex, why Forex, Forex terminology, the trading platforms that we use, and you're going to begin to interact with that on demo and opening your live accounts. We'll also look at TradingView, which is a primary charting software that we use to trade, to analyze the markets. So how to navigate TradingView and use it to the best of your knowledge, to just be, make informed decisions, trading decisions. We also talk about brokers, opening broker accounts, opening your trading account with a live or demo, the different types of market orders. We're going to look at different types of analysis, technical and fundamental. We'll dive into market structure on an introductory level. Okay, so we'll look at structure, primary structure, secondary structure, and things like that, trends, understanding multi-time frame analysis. We'll also look at the Fibonacci tool, which is a tool I use in a certain way, basically to just assist me in my trading analysis. And then I'll touch on fundamental analysis, simply introduce you to it. Look at risk and money management, which I think is the core, really. This and trading psychology is so important. Like everything else I'll teach you in this series may not be as important as money management, risk management, mindset, and trading psychology. Okay, because part of the reason why my journey was also so rough, forget the fact that I was also financially broke and financially struggling, is because of that, my mindset was really broken and I was really desperate to make money fast. So when you're coming into this industry, please don't come with that mindset of desperation, because you're going to suffer. You're going to suffer. So my job is to avoid you doing that. So we're going to do a lot of trading psychology, and throughout, even when I do my market analysis on every week on YouTube, I do go over occasionally on trading psychology, because I think it's really important. 90% of traders fail because their mindset is wrong, not because they don't know how to trade or they don't have the sufficient skills to actually look at the market and determine where a trade is going, but they just don't have the mind to be a professional trader who can just be calm in a very volatile environment. Okay, because the markets are extremely volatile. Okay. And then I'll also throw in a bonus at the end and introduce you guys to find the foundations of supply and demand, which is really a core concept that is important to know when you're looking at trading in general. Okay, so I hope this gives you a brief breakdown of what you're going to be doing, and I'm just going to be breaking this in chunks. So this first series is not going to cover everything. However, this will give you an idea. I don't know how many videos there'll be by the time I'm done, but I'm hoping like maybe maximum 5 to, let's say, 6, maybe 10 videos in this series. So that being said, we can then now look at understanding the history of money. And this is just a quick intro. I'm not going to go deeply into this because I know we did this in history. For example, I remember I did this in a history class talking about the evolution of money. And even as we interact with, the digital age that we're in, the cryptocurrency age that we're in right now, we can see the evolution of money since we first began, where initially how trading was happening in the marketplace was through barter trade. And then we moved into commodity trading, exchanging cows for, let's say, chicken or grains or, anything, like that. And then we moved on to using coins, and we saw the gold coin coming into existence. And then we went into paper money, and then we went into digital money in terms of credit cards and things like that. That is with the computer age and the information age. And then we went to mobile money. And especially if you're from my part of the world, in Kenya, Nairobi, Kenya, we actually, I think, are the country that pioneered mobile transfer of money. Okay, so through our M-Pesa platform. So anyway, and all the way up to today, whereby now the internet has facilitated the digital space, whereby now literally you can transfer money digitally. You do not need a bank account. And that's why the cryptocurrency market is so interesting for a lot of people today. So that's basically the history, just in case you didn't know this history. And if I'm to look at it even deeper and just to help you understand money and why money is money, anything that is considered money is considered money because it's a medium of exchange. We use money to exchange, whether it's digital money, whether it's physical money, whether it's a credit card. The purpose of that is for you to exchange currency, and you keep it's a store of value, so it's valuable. It's supposed to be valuable, and it's supposed to be scarce. So if it's scarce and it's valuable, then it's a good currency to use in terms of money. And we initially began with gold, and the reason why back then gold was such a popular form of currency or a medium of exchange or a medium of or an example of money was because it was scarce. Okay, it was a store value, and it could be divided into different units of value, which could then be used to transact, right? Now, the problems with gold, however, over time, got to a point whereby, if you see here, gold in 700 BC to 1971, we found that there were a lot of problems with gold. One, first of all, gold is mined basically in the ground. Okay, so it's at some point it's not as available all around everywhere, so it's a kind of like a scarce commodity, which makes it which has made it very popular. However, because of this limited supply, becomes very difficult to transact, and people then tend to not want to transact in it because it's so limited. And the thing with gold also, it can be debased, right? And by this I just mean that you can literally mint it or mine it or whatever, and then mix it with impurities, smelt it or whatever into liquid form, and then you can add other things so that so there's a lot of opportunity to corrupt gold, and hence why it's such an interesting market, in the sense that you can end up buying fake gold in the market. And because of that, then it becomes problematic as a unit or of exchange, right? And then because of the limited supply, and then there was the gold rush that happened in 1849, where after gold was discovered, everybody was trying to get their hands on gold. The supply began to dwindle, and then also gold is hard to transport. I mean, can you imagine transporting $1 million worth of gold bars from one location to another? I think you'd feel a whole plane. I don't know. But I'm just thinking it would be very expensive compared to now the money as we know it today. And also dividing it into multiple denominations can also be a challenge, right? So after that gold season, we then went into paper money. Okay, and this paper money is not the money that you know today. We know it, what we was then in the 1600th century was what you call IOUs, which the Chinese are the ones who initially started with this. And later on, the European market also adopted it in the 17th century. And paper money was basically just pieces of paper. Pieces of paper. Somebody would just write, okay, this is an IOU and it's worth $10. Okay. Now the thing with, and then you would take that paper money and or rather you take your gold maybe to the bank. Let's say if you wanted some money from the bank or a loan from the bank, and you go to the bank with your gold, the bank takes your gold, keeps it in a safe place, and then issues you an IOU that then you can use to go out to transact. Now the thing with that was that all these banks, imagine a scenario where there are all these banks printing their IOUs. Okay, now it's very so literally if you look at it, every bank has their own different IOU, written differently, maybe valued differently. So now if you want to transact with me, again, it becomes a problem, because then how do you exchange if all the banks have different IOUs and their values are different? So there was also challenges with that, but that's basically how the whole lending system began to emerge, whereby now you'd find that, you'd go to the bank even today and you give the bank an asset and they give you cash. So gold was the asset back then, right? So eventually in the 1694, banks now came together and and they decided, okay, fine, we're not going to have local banks issuing their own paper money. What you're going to be doing now is having one central bank in the country, which is the overall control bank or the big bank that actually now makes these IOUs and then distributes them, as opposed to local banks doing that. So they removed the circulation of IOUs in the market, and only the central banks were allowed to print money. So again, I'm giving you this background so that you understand, how did the central bank system in the world emerge? This is how it emerged. Okay, now then we have the gold standard. So the thing about the gold standard is that this system was there to back the currency that now the central banks were now issuing, right? Meaning that if you take the gold reserves that these banks had, or let's say not even that, let me even say, if you take your gold to the central bank and they keep it, in their reserves, wherever they keep it in their accounts, then they give you the IOUs or the paper money, okay? They give you based on the value of the gold. So whatever money you have now is very tangible because it's literally based off your savings, which is the gold in the bank. Okay, so literally, banks then were using gold, as gold became a standard against the paper money, right? That was being issued by the central banks. Now, the thing about it is this limited excessive printing of money, which tended to cause a lot of inflation, like I've already explained. I didn't explain this, but outside of the fact that it was hard to distribute paper money because banks were all giving different types of paper money, there was also the risk of banks being able to print too much money, So central banks, again, backed by the gold reserves, were able to now limit this excessive printing of money and hence reduce inflation or manage inflation. And that's why you see today, in today's world, why we've been seeing a lot of inflation happening in, let's say, in our economies. Even if you look at the way the Federal Reserve in the US has been printing money over the years to deal with, issuing stimulus packages, deal with economic downturns, deal with COVID and all that. It may be beneficial to the companies that are actually benefiting from this stimulus packages. However, excessive printing of that money doesn't make sense because it rallies up inflation. And we can see what has been happening in the US. And especially now in the season that we have been in, we can see that, after COVID, there's been a lot of inflation, all because of a lot of excessive printing of money, okay? Now, so this was the first example of the dollar-backed bill. And I'm just putting it here so that you can see, like, this is how the first dollar-backed bill looked like. And why I'm saying dollar-backed is it's very, very, it's called what? Very, very deliberate. Now, up here, you can see it's very different from the dollar that we know today, because it's written, this certifies that they have been deposited in the Treasury of the United States of America. Okay, obviously this money, actually this is a gold-backed dollar bill, really, because if you look at it, it says $10 in gold coin. Now, so this dollar, the initial dollar bill, was backed by gold, right? Okay, so excuse this up here, it's supposed to be gold-backed dollar bill or dollar-backed gold bill, whichever. The dollar bill that is backed by gold, okay? That's how it looks. However, okay, later on after the World War, okay, there was a World War, we all know about it, we read about it in history, in 1914, and then later on the Great Depression that followed the wars, okay, in 1929 and the 1930s, we see that the economies were very depressed, okay, and after a while, the UK and the US, which were then the big economies then, and at that particular point in time, coincidentally, the US had the largest reserves of gold. Okay, they had the largest reserves of gold in the world. So after that depression, and economies are depressed, there's a lot of poverty, people are struggling financially. You find that these economies did not want to now release their gold reserves back to the public, because gold, as we all know, even today, is a hedge against inflation. And it's one of those things that keeps on appreciating in value. I think since gold was introduced those days till today, gold has consistently been year on year appreciating in value. Okay, so that's why you find a lot of people like to put their money in gold rather than just having their money resting in the bank account as cash money. Okay, so at some point, one of the presidents, Roosevelt, decided, hey, we are no longer going to redeem our cash for gold coins. Okay, so end of the gold standard. And the reason was they didn't have enough gold to back the amount of currency that was wanted. I mean, there was so much need for money in supply, but the gold reserves were not enough. So they needed a solution to ensure that, okay, this makes sense. So they just removed the gold standard, and there was an executive order which introduced what we know today as the fiat currency. So guess what, guys? Everything I've been saying is just so you understand how fiat currency came about. And that was in 1933 in this executive order, okay, that was actually issued in April. And so what happened was, they stopped backing the US dollar, or the dollar at the time, with gold, okay? And we just now had the dollar currency. So please note that, just for your future understanding of money and how the economies today or the exchanges today in the world are operating. The dollar is not backed by gold, okay? So if the dollar is not backed by gold, it's backed by nothing. So technically, and this is debatable depending on how you look at it, the US dollar is actually worthless, in quotes. Money as we know it, forget even the US, just money as we know it, because it's not backed by anything. Even my local currency here, because it's not backed by anything, it's backed by what the central banks decide is the value of their cash. But really, in the back end of it, it's not backed by anything. So based on that, literally, we can say that there's, really no value in the paper that you have. It's just the intrinsic values in there, but it's just what people say. This dollar is $1. Yes, what does that mean? It doesn't really mean anything on paper. Okay. Anyway, that being said, we had the Bretton Woods conference that happened after the World Wars and everything, and 44 countries came together, and in the US, in New Hampshire, coincidentally in 1944, pun intended, and these countries, for whatever reason, decided, and I think the reason why they decided this was because most of the reserves of gold were in the US. So they decided that, all the countries linked to the US will be linked to the US dollar, and the dollar will become the main currency, basically. Okay. So there was no longer need to change, gold into currency. Okay, gold was now gold, And now there's going to be a dollar that was just going to be currency, just the US dollar. But please note, this is not a dollar that is not backed by anything, okay? And in this same conference, just for your extra information, was the creation of the IMF, which is what lends money to countries in need, like for countries in Africa, like where I am, the World Bank to help underdeveloped countries to grow. And this was just stemming from just the devastation that came with the world wars. Okay, so it was a good thing, but then obviously it has also had its challenges. Okay, now there's a book, I really like this book, and I just want you to recommend to read it in your own time. It's called The Creature from Jekyll Island by G. Edward Griffin. I'll put a link in the description so that you can just click on it and go and get your copy on Amazon, or I'll put a link to the video that you can listen to the audio online. Okay, and yeah, I think it's just a very good book to just understand about the whole financial setup, how it came about, who is behind the whole setup, and so that you can have a better appreciation even as a trader. Like when you see currencies of different economies fluctuating, going up and down, you'll be analyzing the market, having some background information of exactly what is happening rather than you assuming. So I think this book is really, really powerful. Okay, so yes, we had the end of the gold standard, like I already mentioned. Nixon then announced it in 1971, and yeah, US dollar is no longer backed by anything. So that aside, we now just in summary know that for money or currency to be useful, it needs to be a medium of exchange. It needs to be a store of value, a unit of value, meaning it's divisible into units easily, which money is today. We have all these different types of bills, $100 bill, $10 bill, and so on. And then it's scarce. That also makes money what money is today. It's durable, okay? Now, so that's the end of that, guys, okay? That is the end of the history, and I hope it makes sense. You can tell I'm a storyteller, so I hope you enjoyed that story. Now, I want to now kind of also talk about or mention this website called the Forex Time Zone, Forex or Time Zone Converter. I mean, there are many. The way this Forex market works, it's a 24-hour market. So different time zones. So the market is open in different time zones. So depending on where you are in the world, you will find the different sessions happening at different times for different people around the world. So for example, I am in Kenya right now, in Nairobi, and it's right now, it's about, let's say, 5:57 p.m. Kenyan time, GMT +3. Somebody else, it's probably midnight their time, or it's morning their time, and so on and so forth. Now, because like I said, time is cyclical and 24 hours, these markets, you need to know when the different sessions are, because we have the Asian session, we have the New York session, and we have the London session. So for example, right now, 5:57 p.m. Kenyan time, GMT +3, we are smack in the New York session that started approximately 2 hours ago, actually almost an hour ago, over an hour ago. So this website, forex.timezoneconverter.com, is going to be able to show you the different time zones and convert your local time, wherever you are in the world, depending on when you're going to be watching this recording, to the session times for the market, so that you know when to get into the market to trade. Okay, so all I'm gonna say is your life is about to change, and I'm saying this with a lot of seriousness, because I want you to take this information with the intensity that I am speaking on the subject. Like, this is one of those industries that can literally transform your life, can literally help you to create a second or third income, okay? Possibly even replace your full-time income, help you to create just generally multiple streams of income, okay? So if you're able to see the end of this road, I don't think you can really see, just know that it goes on and on and on, just telling you that there's a lot of growth potential, ability for you to just scale up financially, and just become, financially free. Okay, so if you're on this class, what I'm going to say is take these classes seriously. Okay, don't take anything for granted. Please, by all means, do not. Okay, because if you do, then you're going to mess up. And if you don't, your life will literally change right in front of you, right? Or in front of your eyes. And guys will be like, hey, what happened to you? I'm like, hey, I'm a Forex trader right now and living the life. Okay, anyway, I also want to mention something called the power of compounding. And there's a quote here that says by Jim Brown that says, I'm working full-time on my job and part-time on my career. So your full-time job is basically to become financially free. Your career is what you're doing right now. Okay, whatever it is you're doing, whether you are an engineer, that's your career. I know we do that full-time. Our jobs are full-time and we keep saying things like that, but really kind of reverse that thinking in this sense that you need to be able to create an income that can grow exponentially. Okay, I mean, a job, there are limits. At some point you will retire and you'll be given your package and be told thank you, and then the income will stop. However, if you understand the power of compounding, which Albert Einstein says is actually the seventh wonder of the world, you'll be able to understand why it's important to begin to think like that as you dive into this industry of trading. Okay, because if you understand the power of compounding, when you finally learn how to trade and start making your profits and begin to compound your profits, you'll be able to see how you can slowly over time create a really awesome financial nest egg. Okay, so that being said, what I want to do is show you our website called, and this is online, you just have to click on the calculatorsite.com stroke finance stroke calculator stroke compound interest calculator. Now, I'm just doing this exercise to give you the vision and, of your potential future financially. And I like this too because it also inspires me, so yeah, so let's just go right into that. And I am going to stop sharing this, and I will probably go share my my screen in a few seconds, guys. Let's share my screen. And that's where we are. So what I want to do is literally go to this site. And it's called the calculator. I think that's what it's called, the calculator site. So I'm just opening it, guys. I'm just opening it and opening it. This is it, the calculatorsite.com. And I'm specifically going to click on the compound interest calculator. Okay, the compound interest calculator. So hopefully my internet will not let me down. And then we'll wrap up this class in a series of many. So my internet is just doing its thing. You're gonna be patient. I actually should have opened it before, but it's all good. We shall be patient. Okay, there we go. So guys, this is a very interesting tool that I discovered in my beginning phases of just learning how to trade. And I like it because it helped me to create a plan, like mentally and even literally, write it down and say, okay, fine, how much money do I want to be able to make in this industry? Now, so I'm just gonna I'm sure you've used this in your own. This is not something new, but I'm also just looking at it because I'm assuming that I'm talking to people from all walks of life. So there could be especially very young people who are just starting out in their careers and have no clue how they're going to be able to compound their monies and everything once they start making money in Forex. And I think it's important to just mention it. So if this is not relevant to you, this can be the end of your class. But if it is, just stick around for like 2 minutes and I'll be done. So when it comes to this calculator, okay, it gives you the opportunity, first of all, to look at currencies in different. So I'm going to stick to the dollar. And I'm going to assume that, for example, we want to start trading when we do go live. Okay, when we do go live, I'm going to assume that we are going to start with, let's say, $100 at a minimum. Okay, for example, and then we are going to be targeting a certain interest return, a return on investment every month. And we are going to be compounding maybe for the first 2 to 3 years. Okay, so I don't know if this site is now. I'm just waiting. Be patient with me, guys. I'm waiting like you for the net to like wake up. Okay. Okay, so guys, if this doesn't open up, I'm just going to suggest that you come to this website, calculatorsite.com, click on the compound interest calculator, and then just key in everything, in these empty boxes, like what initial balance you start trading with. Let's say if you want to make like 5% a month, you can change this into a month, or if you want it in a year, you can do the same. And then compound for how many years? So maybe short term 2 to 3 years, longer, medium term 5 to 10 years, longer term maybe 20 years, depending on your age as well, right? And then once you do that, you'll be able to see downside, like exactly how much money you'll have made. Because now I think I don't know for what reason this page is hanging and I'm unable to literally do anything on there. So this exercise is futile, but maybe I'll do this in a mini follow-up video. Okay, so I won't get stuck here. But that's basically it. So guys, thank you once again for just being in this class. I hope this first session has been beneficial as an introduction. Next video, module 2 or part 2 or whatever, but the second one, we are going to now begin to tackle like basics, like what is Forex, why Forex, etc., terminologies, and so on and so forth. So thank you very much and see you soon.